Welcome back to Investing Talk Podcast. Today we're zeroing in on Dell Technologies, a true heavyweight in the tech hardware arena. Their upcoming earnings report isn't just another set of numbers, it's a critical moment. Could signal big shifts. We're going to sift through all the crucial details from the sources you've provided, give you a comprehensive sort of insider's understanding of what to watch for, what the market really expects, and, what history tells us about Dell's path.
Exactly. We'll look at Dell's past performance, set it against, well, the current market context, and explore the potential scenarios that could really unfold when those figures hit the wire.
Yeah.
This isn't merely about the financials. It's about understanding the complex underlying forces, right? The things shaping these outcomes.
Absolutely. And before we really dig into it, just a quick note. If you find this analysis valuable, please remember to subscribe, leave a comment. It genuinely helps us bring you more of this kind of content. And hey, if there's a specific company you'd like us to look into for a future episode, just let us know in the comments below. Okay, so with so much writing on this report, the immediate question for any investor is, well, when? When do these numbers drop? When do we hear from Dell?
Dell Technologies is slated to report its earnings on August 28th, 2025. That's a Thursday. And it's going to be precise, after market close. That date's circled in red on a lot of calendars, believe me. It often sets the tone.
August 28th after the close. Got it. And what are the analysts, the folks on Wall Street, what are they currently baking into their models for this quarter? What's the consensus?
Okay, so for the current quarter, the consensus for earnings per share, EPS, that is, it's projected in a pretty tight range, between $2.07 and $2.28 per share. Looking a bit further out, for the full fiscal year 2026, the revenue consensus is sitting between $101.0 billion and $105.0 billion. So these numbers, they represent the collective wisdom, or maybe caution, of the street.
Okay, that's the street's view. But what about Dell's own management? Did they set the bar high, or are they kind of playing it safe with their own guidance? Because company guidance, as we know, that can often be a bigger market mover than the actual reported numbers.
That's where it gets particularly interesting, and frankly, a bit of a strategic chess match. Management previously guided for FY26 EPS right around $9.40, and revenue between $101.0 billion and $105 billion. Now, what's crucial to understand here is that when they issued this guidance, it was actually below the broader consensus estimates at that time. Those were higher, like 10.35 EPS and $110.5 billion in revenue.
Wow, okay, so they guided below where the street was?
Exactly. This wasn't just a slight difference. It signaled a notably more cautious outlook directly from the company itself. It kind of suggests Dell's leadership might be bracing for maybe prolonged softness in their core markets, perhaps prioritizing margin stability over aggressive growth. That could definitely reshape expectations.
That's a fascinating dynamic. The company essentially undercutting street expectations right out of the gate.
Yeah.
Does that tell us anything about the whisper number for, that unofficial market expectation that sometimes drives even bigger initial reactions?
Yeah, the whisper number.
Yeah.
Our sources don't explicitly give us one for DUT this time around, but typically these unofficial figures, they track slightly above consensus when sentiment is really optimistic or, below when caution prevails. The fact that we don't have a widely circulated whisper number this quarter, well, that could itself be a signal, maybe indicating a more divided or uncertain feeling among traders. So we're really leaning on the official consensus and that company guidance as our main indicators here.
Right.
Okay, shifting our gaze back a bit. How has Dell generally stacked up against these expectations historically? Have they been pretty consistent, or are they known for throwing a curveball now and then?
Historically, Dell Technologies actually has a pretty solid record, usually meeting or even exceeding consensus estimates. They've been quite reliable, actually. However, the last quarter was a big exception to that, a significant one. They reported actual EPS of $1.55. The consensus was $1.72. So that's a miss of almost 10%, not just a slight miss, a notable stumble.
Wow, a 10% miss. That's quite a stumble for a company like Dell. That definitely raises a red flag, doesn't it? Is this just a one-off blip, a temporary thing, or are we seeing the start of something, well, more challenging for Dell? Right. And how did the market react right after that miss? That's the million-dollar question, isn't it? Blip or trend? What we've definitely seen is more volatility right after the reports lately, that last 10% miss. It resulted in a pretty stark downside move for the stock. And what's also interesting is that in prior quarters, even when they did surprise to the upside, beating expectations, we often saw an initial price pop, sure, but those gains didn't always stick around. They frequently reversed or faded the very next day.
Huh. So even good news didn't always last.
Right. It's almost like investors are playing prove it with Dell right now. Sustained momentum after a positive surprise has been elusive. It really highlights that the market isn't just looking for a beat anymore, it's looking for sustainable improvement, clear forward visibility.
Okay, so given that volatility and the recent miss, what about the underlying metrics or specific business segments? Are there trends showing up there? Where are the strengths? And maybe more importantly, where are the pain points?
We've certainly observed signs of gross margin compression. That's pretty clear across the board. And like we mentioned, that consistently cautious forward guidance from management just adds to the uncertainty. Digging into the segments, free cash flow and the client solutions segment that's mostly PCs and servers, they've shown a clear weakening trend,
That's a big chunk of their business, right?
a very big chunk. So weakness there is significant. The Infrastructure Solutions Group, ISG, which includes things like storage and networking, that's been more mixed. Some variability across different periods. So yeah, the overall picture, it's a company navigating some genuinely challenging dynamics, particularly in its traditional hardware strongholds.
Makes sense. Now, beyond just the numbers and segments, what else has been going on with Dell specifically this past quarter? Any big product launches, game-changing acquisitions, or even just significant chatter in the sector that we should know about?
Well, according to our sources, not really. There haven't been any major product launches or significant M&A reported during this specific quarter that would act as a clear catalyst. The discussion around Dell in the sector has largely revolved around their ongoing cost controls and execution, especially as they grapple with what everyone seems to agree is pretty tepid end market growth. It suggests they're maybe more focused internally right now. Optimization over big external moves.
But Dell doesn't operate in a vacuum, obviously. How do these company-specific things fit into the broader tech sector, the macroeconomy? What's the bigger picture influencing a giant like Dell?
Yeah, that's critical context. If we connect this to the bigger picture, well, the entire broad tech sector is undeniably feeling the impact of ongoing macroeconomic uncertainty. That's clear. We're seeing uneven enterprise spending. Some companies are spending, others are definitely pulling back. And there's a general normalization in PC and server demand after those boom years we saw.
The post-pandemic cool down.
Exactly. And while supply chains have mostly sorted themselves out, which is good news on one hand, pricing across hardware, it remains under significant pressure. Makes it tough for companies like Dell to keep margins up. Plus, you've got higher interest rates making borrowing more expensive. That can dampen overall capital spending from businesses. All these factors together, they act as real headwinds for large tech hardware providers like Dell. It's a tougher environment out there.
Yeah, it sounds like navigating a bit of a minefield, not just a bumpy road.
That's a good way to put it.
So how have the analysts been reacting to all this, especially after that earnings miss and Dell's own cautious guidance? Are they still generally positive, or has sentiment shifted?
Well, following that prior miss and the cautious guidance we talked about, the analyst community definitely reacted. Several lowered their price targets or issued more neutral stances on Dell. They specifically mentioned concerns around valuation, questioning if the stock price still made sense given the growth outlook, and also execution risk, especially with what many see as a maturing PC and server cycle.
So a definite shift towards caution from the street, too.
Yes, a clear shift. More of a show-me approach now, rather than just assuming the best.
All right, let's switch gears then. Let's look at the stock itself. How has it been trading leading into this report? What's the technical setup look like? Any strong momentum building?
Dell's stock has traded with a, let's say, modest upward bias heading into these earnings, which is, positive on the surface. However, the momentum, it's been notably less pronounced compared to prior quarters. It's not seen the same kind of strong run-up or speculative buying we might have seen before previous reports.
So kind of quiet compared to usual?
Relatively quiet, yeah. It seems to reflect pretty subdued investor expectations. Suggests the market isn't really anticipating a blowout quarter, maybe more of a measured performance.
Okay, so the stock's movement is a bit muted. What about the options traders, the folks betting on future price moves? What are they telling us about expected volatility? How big of a swing are they pricing in?
The options market. It's definitely pricing in a significant post-earnings move based on historical patterns and current at-the-money straddle pricing. And just quickly, a straddle is buying both a call and a put, betting on a big move either way. While the implied volatility suggests a potential move of plus or minus 7% to 9% in the stock after the report.
7 to 9%. That's pretty substantial for a company Dell size.
It is. It indicates that while there isn't a strong consensus on direction, there's definitely an expectation of a shakeup. something's going to happen. And while it wasn't explicitly detailed in our sources, typically you might see the put-call ratio trending flat to maybe slightly defensive ahead of a report like this. Hints at some caution among traders.
Okay, so lots of data points here. The company's caution, analyst downgrades, subdued stock momentum, but high anticipated volatility. Let's play out the what-ifs. What's the dream scenario for Dell right now? The bullish case. What needs to happen to really surprise the market positively?
Right, the bullish case. Well, it would involve Dell delivering an EPS and revenue beat, not just against consensus, but ideally also against any whisper number out there, if one emerges. But crucially, this beat would need to come with improved FY26 guidance. That's key. We'd want to see management either raise their guidance significantly or at least narrow that cautious range towards the higher end of what the street expects, beyond the headlines. Positive surprises in ISG, that infrastructure and cloud-related segment, or clear signs of renewed momentum in PCs and client devices. That would be huge. And, signs of margin stabilization across the business, robust free cash flow, that could really drive the stock meaningfully higher. Signal a real turnaround.
Got it. Beat, raise guidance, show strength in key segments, stabilize margins. That's the bull case. Now, the flip side. What triggers a sharp bearish reaction? What's the nightmare scenario that sends the stock tumbling?
The bearish case? Well, that would be a clear miss on those headline numbers, both EPS and revenue, or perhaps even more damaging, just reiterating that cautious guidance. Or worse, issuing even softer guidance, especially for FY26 revenue and margins. Any signs of further deceleration in client or infrastructure revenue, or continued, maybe even deepening margin contraction, that could prompt rapid downward revisions from analysts and a significant sell-off.
So another miss or just sticking to the cautious script could be bad news.
Very bad news. Also, any commentary hinting at persistent demand headwinds, maybe a broader slowdown in enterprise IT spending or unexpectedly high operating expenses. That could accelerate a downside move, too. It would basically confirm the market's current skepticism.
Okay, so if you're watching this report live, scanning the headlines the moment they hit, what's the single most important metric or piece of info you'd zero in on? What's the ultimate takeaway for you, the listener, to really focus on?
Yeah, what does it all boil down to? The absolute key metric to watch, in my view, is their forward guidance, especially that FY26 EPS and revenue outlook, and how it stacks up against the current consensus. That guidance is Dell's direct message about its future. Beyond that, pay very close attention to the Infrastructure Solutions Group, ISG, its revenue, and importantly, its gross margin. Like we said, ISG's performance has been mixed. Any sign of real recovery or further deterioration there, that'll be a critical indicator for their enterprise health.
Forward guidance first, then ISG performance. Makes sense. Okay, pulling all these threads together then, the history, the macro environment, the guidance, what's the overall sentiment, the leaning regarding Dell heading into this report? How confident are you feeling about a positive outcome? Overall, I'd say the sentiment leans neutral, but with a slight, noticeable bearish tilt. That's mainly because of that recent earnings miss, the cautious guidance Dell already gave us, and the kind of subdued investor feeling we've seen leading up to it. If I had to put a number on it, a confidence score for a strong positive outcome, maybe a 4 out of 10.
Only 4 out of 10, okay.
Yeah. The risk feels balanced to negative, meaning based on current expectations, there seems to be more potential downside than upside. But look, a beat and raise scenario, it's not impossible. It's just not the base case right now. It would take genuine improvement in execution and a real surprise on that forward outlook. A significant positive catalyst.
That's a very clear assessment. So for our listeners thinking about their own approach, maybe they own Dell, maybe they're thinking about trading it, what are some strategic considerations based on all this analysis?
Okay, strategy. For risk-averse investors, it might be wise to consider avoiding holding common shares right through the earnings announcement, purely because of that heightened volatility and the downside risk we talked about, especially after the recent miss and guidance cut. Now, for those with a higher risk tolerance, maybe looking to play the volatility itself, an earnings straddle could be interesting, buying both the call and the put. That could potentially capture a move bigger than that implied 7% to 9% if the market has mispriced the volatility.
Betting on a big move, but not necessarily which way.
Exactly. Alternatively, if you're leaning bearish yourself, maybe a put skew or a bear put spread, those could benefit from another earnings miss and guidance cut, while limiting your upfront risk compared to just shorting the stock. And for long-term holders, the strategy might just be patience, Wait for the dust to settle post-earnings. Maybe consider adding to your position, accumulating shares on any significant weakness, only if your long-term belief in Dell remains strong and you start seeing actual visible signs of margin improvement and recovery in those core segments.
Some solid options there depending on your risk appetite and time frame. So what does this all mean for you, the listener?
Well, Dell Technology stands at a really fascinating point with this upcoming earnings report. It's not just about them hitting or missing a few cents on EPS. It's about how they're navigating this complex macroeconomic landscape. And crucially, proving they can stabilize those key segments and margins in what's clearly a challenging environment. Absolutely. The insights we've pulled from these sources really underscore that point. Understanding the nuances, the company's own guidance, the broader macro trends, it can be just as critical, maybe even more so, than the headline numbers themselves. It really highlights how a company's internal outlook can shape market expectations before the report even comes out.
We certainly hope this comprehensive look at Dell's upcoming earnings has given you the clarity and insights you need to make your own informed decisions. It really makes you wonder, doesn't it? Beyond just this quarter, what does Dell's performance, especially in those core PC and infrastructure segments, tell us about the broader health, the future path of enterprise tech spending overall? Definitely something to think about as you watch these reports unfold. Thanks for joining us on Investing Talk Podcast. We'll be back soon with another detailed analysis of what truly matters in the markets.